Good morning, everybody. Welcome back to the Everyday Growth Advisors live stream. I hope you're having a great morning. Welcome back, DJI Tribe. How are you guys doing? It's about to be a relatively short week here, and we are about to embark on this crazy journey. It's game time. I hope you guys are ready. Couple more days till EGA V2 is out. I mean, if you're excited as much as I am, then you will get some really great surprising news by the end of this week. We are working hard to provide some really interesting stuff for you guys coming up. And I hope that you guys are ready, because honestly, I have been working really hard for this moment in my life for the past 1 year, day in, day out. And I just hope that it's going to be worthwhile so that you guys can have a better 2021 alongside with me. Now, today we have a lot of stuff that we have to go through, so I'm going to take time to do it all. As usual, if you have any ticker breakdowns from me, go ahead and put it in the chat. Running picks for the stream are up. The Snipe List is up. If you want to go have a look at it, these are our picks for today. Going forward, we'll put up a new list tomorrow based on anything we see changing. There are a couple of things here that I'll go through in a second. Let's have a look at the news real quick. So Baba getting a continued sell-off here. As many of you know, I've been actually bullish on Baba, especially at these prices. I really like the stock. But then we had a further deeper sell-off here on Ant Financial's further woes. The intrinsic value of the stock is at 280 bucks, and it's trading at $200 right now. Many of you have been messaging me on Instagram asking me, is this the BTFD moment where you buy the dip? And the only thing that I can say right now is wait for this selling pressure to be over and some form of a reversal to come in. Sorry, I had to take a sip of water there. But yeah, there is definite selling pressure that was pushed down sometime last week, and I think this selling pressure might continue for a little bit before we actually see some buying pressure come in. Now, is this stock worth it to own? Absolutely. Okay, absolutely. It pulls in more revenues than Amazon and has less operating expenses than Amazon. Okay, this company is a great company to own long term. All right, this stock valuation is obviously too cheap, but cheap can get cheaper, and we don't want to try and time the bottom. Okay, so the best way you go about this is, try to cost average in. If you're a long-term investor like me, I've already started buying some shares last week. And then I've been adding CRM as well. Anything that's been sold off abruptly like this, I've been adding shares, right? With CRM, we've been bullish on CRM, right? We've been seeing nice kind of a rounded bottom here. We thought ABCD wave would go something like this. Obviously, it's not obviously going to go exactly like how I drew it, but, that was kind of like the idea there. And so add your position in slowly and slowly. Okay, that's the name of the game here. Slow and steady. Other news, stocks and equities future climb, treasuries retreat. Okay, people are getting bullish, and this is the moment when we're starting to get irrationally bullish. Okay, irrational exuberance. Remember Santa Claus rally, yada, yada, yada? Yeah, I'm telling you right now that it's starting to look kind of scary, okay? And there are a couple of things that is the reason why I'm saying this. I don't just go off my feel, okay? And I'm not going off technicals neither. So I'm gonna cover this in a second. Trial begins for 10 accused. Okay. Drug makers agree to halve prices to secure access to China. Okay. Indonesia expands ban on foreign visitors. Other over virus strain. Okay, that's good. Okay, Philippines, and then Trump signed a virus relief bill. This is the reason the market is somewhat rallying. But then again, I don't really think it's. The thing about this bill is that it was 5,000 pages long, and I saw that on pretty much majority of the Congress hadn't really fully read the bill, so we don't really know what is in this bill. We just know that there's a $600 payout and then a bunch of help for a bunch of businesses, but there is no clear breakdown on what this bill is supposed to be really encompassing. It's 5,000 pages, and if they were given I think a couple hours to read it, which is ridiculous in my opinion, right? So yes, I mean, in my opinion, it might be a little bit of those like a kind of oh man, we're rallying, and then pff, everything just kind of pushes down after that. Market makers, after all, have to get the better prices than these right now, and so expect a rug pull at any given notice. Okay. This end of the year rally though, it should be interesting. Okay, leading into the end of this year, remember we only have a couple of days left, and the markets close on Friday, so we're only going to have a Monday, Wednesday stream this week. Okay, and you know, with this shorter stream, I'm going to try and cover more material so that you guys have a better understanding of what I'm looking at here. Okay, so let me cover the news, and then let me kind of go into what I'm seeing and everything that you guys should be keeping track of right now. Remember, you know, after you come back from a break like this on a holiday, what's the first thing you need to do? You need to, you know, get in tune with where risk is at, right? How are people viewing risk? Where is the capital flowing? You know, that kind of sets you up for what kind of trades you're going to take for the week, right? If you don't know those things, it's going to be very difficult for you to even figure it out, all right? So China tells Ant Group to refocus on payments. China's been regulating Ant Group, and that's another reason why Baba's been falling. It's a subsidiary. 2020 was one of the worst year for oil write-downs. This is definitely something that we all know. Investors doubled down on stocks, pushing margin depth to record. This was an interesting one. There was a little infographic, or let me try to find it real quick. So I think it was this guy, yeah. So look at this real quick. Investors borrowing against their securities reached a record 722 billion last month, climbing alongside the stock market. What does this mean? This means that the amount of people using margin to borrow alongside their securities, because when you have securities you can use margin, it has been rising and has peaked out right now at 722 billion, okay, which is actually pretty insane. All right. Now, what does this mean? It means that people are over leveraging, okay, over leveraging. So, and this is a FINRA sauce, okay, so this is your financial regulator. If I mean, how many of you think this is a good thing? Okay, I personally, I think that people are so in other words, the layman way to understand this is people are borrowing money to invest into the stock market alongside their other investments, because the way that our financial system works, which in my opinion is kind of stupid, and you know, just humor yourself for a second. The more money you have, the more worthy you are to borrow, right? So basically, the more money you have in terms of collateral and assets, the more credit the broker or banks or financial institutions offer you, which means that at any given moment this bubble can burst. Okay, so this is something that you should be watching. All right, it's something that you should be watching. Okay, and then what else is this? So everybody's piling into stocks. Everybody's buying stocks. Why? Because cash is trash. The dollar is declining. Right? Why? Because interest rates are so low. What's going on with all of that? Treasuries suck to hold. They're yielding very low rates. But is it? But is it? Okay, so this is the question you need to ask yourself. But is it? Okay. So we are in a phase now where we have to be extremely careful with how you start leveraging down. Okay. Now, bond boom comes to America's colleges and universities. Okay. So they've been issuing bonds. Of course they are issuing bonds. Nobody can finance their businesses anymore, right? They can't finance their businesses. Actually, I'm surprised that more businesses are not doing this. More schools, I can tell you that at some point in time, counties are even going to do this because they're running out of money. And the government's not going to be able to foot such a huge debt. So the only thing the Fed can do is continue to lend money to people at a very cheap rate and hope that they can pay them back. Hope. So the Fed is the lender of last resort, and they put everything on the balance sheet. Okay, everything on the balance sheet. They say, give us all your debt until you can pay it back. Okay, so you need to understand these things. They are all what the financial system is built upon. All right, it's not exactly just like credit is created out of thin air. Yeah, a majority of the world runs on credit, but where's that credit coming from? They're coming from your financial institutions. Who lends those financial institutions credit? It's the damn Fed. Okay, so you gotta be really careful. How hedge funds earn billions during COVID-19. Okay, that's cool. So we read all the headlines here. What does that sound to you? It sounds very hybrid to me. I don't know, not bullish, not bearish, right? Pre-market here looking very green, which I would say this is a facade. You got to be extremely careful here, okay? Especially since we're hitting all-time high across the board, right? Dow Jones, S&P, NASDAQ, all of them. NASDAQ rallying the furthest here. Of course, this can keep going. Remember, we are in a phase where it's possibly going to become a fueled stock market rally, but you have to be cautious. So now let me get into the cautious part. Why do you have to be cautious right now? The first thing is people are over leveraging, okay? The second thing is, remember how I told you guys that we are always going to be tracking bonds versus the S&P 500 dividend yield? Well, on November 30th, the S&P 500 dividend yield was at 1.62%. Okay, that means if you held one share of S&P 500, you received 1.62% in dividend yield. Okay, and remember what we were comparing this to at that time. We were comparing it to bonds, right? And we were always comparing it to the 10-year bond and the 30-year bond because these are good indicators for the long-term risk. This is your long-term risk, right? And this is a risk-free asset. What are these bonds? These are treasury bonds. Okay, so when you hold a treasury bond, it's risk-free, okay? We assume that the government will always pay you money to hold these bonds, right? And as long as these rates are below these rates, right, then people will never buy the treasury bonds, right? But you can see what has been happening. The treasury rates have been steadily kind of increasing here for the 10-year, right? 92, 95, 94, 95, 96. They've been going up, going up. We kind of had a 96 moment here, a 94. We're hovering around this level here, right? And you can see that we're hovering around the 1.66 to 1.70 level here. Now, this wasn't so much of a problem when S&P 500 dividend yields were at 1.8 and 1.75%, right? Why? Because people would still choose to hold equities here because they would still receive a premium for holding these equities, and buying the S&P 500 index, even though it's not a full risk-free asset, is still a fully diversified investment because you're buying into 500 top large cap companies, right? But here now, you can see that the S&P 500 dividend yield has dipped down below the 30-year bond. Can you see that? Which is I'm starting to see cracks in the system along with the immense borrowing, right? Immense borrowing to fund equities, right? So people are going all in on something that may be losing steam, okay? So what happens here? What am I looking at, or what is the trade idea that I'm generating from this, or what am I getting at here? What I'm getting at is that eventually what's going to happen is people are going to flip to the other way, especially since the dollar index has been selling off massively, okay? So the dollar is very weak now. If you look at the dollar on a daily chart, look at what has been happening, okay? The dollar has been in a huge downtrend, right? You can see this. Now, if the dollar continues its march down, then what happens here? Well, equities are cheaper to purchase. That's the reason why people are borrowing like crazy to purchase equities, right? If today your dollars that you receive are allowing you to purchase more equity because it's cheaper, right? People would be buying more dollars especially from foreign countries, right? I'm not talking about just the US here, okay? I'm talking about foreign people, people who are investing from abroad, people who are investing from around the world, right? If the dollar is cheaper, then what do people do? They buy lots of dollar, okay? Because why? Then they can get more dollar to put into their portfolio for the longer term, right? And then when the dollar appreciates, what do? They sell the dollars off. And along with that, what happens? There comes the equity slide, right? Because then your dollars purchase less stocks, and then it starts to become a problem, right? Well, what's the smoking gun? What is the smoking gun for this kind of a situation? The smoking gun for this situation is when the S&P 500 dividend yield dips below the treasury rates. Okay, that's the smoking gun. So it hasn't yet. The 20-year hasn't yet taken over, but when this happens, and you see, once, as I told you, we need to track these levels here, because every day these rates change, right? And we need to track these levels. Once we see that the bond rates are starting to increase, then we know that people are getting risk off. Okay, risk off. That means they're going to crowd out of equities, and they're going to start buying the dollar back. Okay, that's when people start buying the dollar back. And then what becomes the flip side of this investment? It becomes bonds. Okay, it becomes bonds, because you can see the bonds behave the same way that the dollar behaves. Okay, because these are both generally considered very low risk assets. Okay, they're considered very low risk assets. 60% of the world's currency is the US dollar, for your information, if you guys didn't know that. Okay, 60%. And the whole world has various currencies, many different currencies, but 60% of the world's currency is the US dollar. That's the reason why we have a lot of US denominated debt around the world. And that's also another reason why the US debt bubble is not such a big issue, because of the GDP of the United States of America. Okay, so these are a couple of things you need to understand. Okay, so the smoking gun here is, watch this very closely. The S&P 500 dividend yield, if it doesn't improve, this is the first time, right? Next month, if it goes lower than 1.62%, because on average, every company in the S&P 500 is reporting less dividends, which means that they are performing poorly, then you would see a sell-off. Does that make sense, guys? It's just very simple, right? Like, it's a basic thing you need, but you need to be on track. You need to be on top of these things, and and this is the first time that I saw it. See, we never had this problem before, right? We were looking at this, we were like, oh, 2.3, 2, 1.9, 1.9, 1.8, okay, 1.7, 1.7, 1.8, oh, and then 1.6, we jumped almost 40, 50 basis points, okay? And so we want to be on top of this to make sure that the December, so on December 31st or December 30th, we'll come back here to check what the S&P 500 dividend yield is, okay, and make sure that the dividend yield didn't get completely obliterated, all right? So if we go lower than 1.6%, then you know that it's a time for us to call a top here in the market, okay? Because then what's going to happen is, we know that people are going to start crowding out of equities and into bonds, okay? They will go risk off. All right. Right now, you need to understand what is driving the market up higher and higher is the irrational exuberance, right? Irrational exuberance. Okay. Cool. All right. I just wanted to explain that concept, because these are things that you have to keep track of. Okay. So that's done. Let's see here. What was I going through? Okay, this is IQ stuff. Yeah, we'll go through that in a second. Okay, that's cool. All right, well, let's see. Do you guys have any questions here? Good morning. What's up? Welcome in. Hi, Shoei, Melissa, DPM, Phil, what's up? Anders, Alex, Azucena, Santosh, Jacob, what's up? Good morning. Jason, Evelyn, what's up? Dhruv, hi there. Andrew, good morning, man. So this week we're gonna have possibly an announcement on the 30th, and then 31st, and then the 1st. And I won't be doing a live stream on the 1st, but we will be posting announcements on YouTube and on Instagram. Watch out for those. I have some big surprises for you guys. I think by this time, you guys could probably figure it out. But EGA will be launching a all-inclusive, comprehensive surprise secret. You thought I was going to give it away, huh? You thought I was going to give it away. A surprise secret. That's what I said. Okay, so we have the Snipe List here. And lots of stuff on the Snipe List today. Palantir, we like this one. Kind of breaking out into a pennant here. If you believe a big correction is coming, how would you play it? QQQ puts VIX calls. Well, VIX calls looks great if VIX can sell off further. I would say 22, like $22 is a nice spot to buy VIX here. If you can get it at $20, that would be like a dream. But yeah, I would go QQQ puts for sure. You want to do a double approach. So you want to do bet against tech, right? You bet against tech, and then the next thing you do is you buy bonds. So TLT. So 20 plus year treasury ETF, you buy this one. Okay? And then you buy puts on QQQ. That will be like the double approach if you really want to make some decent money, right? That would be my approach, because these will be relatively cheap to buy, okay? And it would yield a good investment, a good return on investment. Okay, cool. So first up on the Snipe List here is PLTR, Palantir. We're looking at this because it is actually in a very interesting kind of a pattern here. We love pennants like this. This may form a breakout very soon. It's in squeezing and squeezing and squeezing. You can see this. And so this breakout pattern is very appealing to me personally. I like this one. Come on, marker. And specifically, this business has had a lot of analyst coverage this past 1 week. So the catalyst for this one is going to be, it's been consolidating and squeezing in a uptrend or a bullish pennant, bullish news, but bearish analyst coverage might send this one higher temporarily as investors are still piling in. Okay, the irrational exuberance with this one is not over. So here, the risk to reward ratio favors the upside with bullish consolidation. We can see this bullish consolidation. We're kind of squeezing upwards here and squeezing into this little, thingy here, right? I mean, if you want to be like more like, what about it? Technically it's already like squeezed in here, right? And so it's going to break out here, possibly. I see a nice risk to reward ratio here, at least a 1:2 risk to reward ratio. If your stop loss is somewhere down here, so the market makers don't stop you out, you're looking at a 1:2 risk to reward ratio here. Looking at a $33, $34 target here, if you were to get a full extension here, okay, from $28. That would be the target. But of course, this is going to be a day trade / scalp. So watch this one, okay. Now, another thing that I must mention is with all my analyses that I do, macro conditions of the market, which is what I just explained, you need to notice that majority of the times when I make these analyses, they're usually about 1 or 2 weeks behind. Okay, they're usually 1 or 2 weeks behind. So the fact that it's 1 to 2 weeks behind, you have to give the market till mid of January to come to fruition with the the sell-off. But as I told you, you need to be on top of this stuff by looking at it now, right? Remember that if you are reacting to market conditions, you have lost the battle. Okay, you have to anticipate. You have to be able to anticipate. You have to be able to look at macro conditions in order to understand what is going on. All right. So looking at the macro conditions are not just enough by looking at SPY technicals or NASDAQ technicals. What is it that moves capital? It's risk. And you have to know how to measure risk. Okay, and the way that risk is measured are through very, very specific ways. It's the cost of borrowing money versus the return on an investment, right? That is literally the definition of risk, right? How much of money are you applying as a lever to make how much of money? That is what we call risk, right? If you have for example, 1:2 risk to reward ratio, that means you're applying 1 risk to make 2 reward, right? Which is a great risk to reward ratio, right? That way you're probably not going to lose out, right? If you repeat this process endlessly, you will never lose out, right? So these are the things you have to understand. Just out of curiosity, and I would love for you guys to chime in on the chat here, because it seems like you guys are a little quiet. But did you guys understand what I said with the breakdown about bonds and liquidity and how it's moving through the markets and what I'm looking at, or the smoking gun? Did you guys get what I said? Because I mean, it's really, really important that you guys understand this. Okay, so PLTR with the upside squeeze here, we're looking at a possible target range of $32 or so. Okay. Next is going to be Facebook here. This one still favors the downside, and remember, our catalyst for this one was the antitrust lawsuit. Zuckerberg has been offloading shares. We've been pointing this out for 3 weeks now, and it's been consolidating and really holding below this pennant. Okay, so you can see this here with Facebook. Consolidating, holding below the pennant, very bearish. There was a death cross here, and it's been continuing its downtrend. We're looking at an ABCD wave down here. Hopefully, if Facebook gets rejected one more time, we'll see a move to the downside here. Looking at about, I want to say, let's move this. Yeah, about a 7% move here. Okay, to the downside. If we get that full, extension to the downside here. Okay, cool. All right. So this one, risk to reward ratio favors the downside. We like playing this one to the downside with the possible $15 move. Use risk management through proper position sizing here and keep it defined. When I say that, don't go, ape shit and, be buying like crazy amounts of puts and stuff like that. Keep it defined. Okay. Remember, you can access these charts anytime just by clicking on the link there. Okay. And I'm usually pretty good about updating them and making sure that they're all right. If you find any of these links are broken or something like that, make sure that you guys let me know. Okay. Okay. So then we have the flip side also, and this is another one. Somebody was asking me what else you can hedge against the market. QQQ puts and VIX calls, right? The other thing is you can also buy gold, right? And gold has been selling off for a while. Okay. And I'm seeing lots of institutional money flow into gold. I'm going to turn on the Heiken Aishi candle so that we don't have these gaps. But you can see here that gold has been in an insane bull flag. Okay, can you see this? It's been an insane bull flag. This is what we call a bull flag. Okay, and we had a sell-off, and then now it's kind of breaking out of this bull flag. And chances are that it could make a rally once again. Okay, now, why would gold make a rally? Well, what is the gold pegged against? What is gold denominated against? You guessed it right. The gold is denominated against the dollar. Therefore, if dollar goes up, right? If the dollar goes up, then gold goes down, right? If gold goes down, then dollar goes up, right? So, if this goes up and this goes down, continues to go down, then the gold will go up, okay? So we have to be also careful of those understand those things. So gold here looks like it wants to break out. Okay. And if gold breaks out here, then that means we're going to see risk flow into the safe haven. Now, the thing about gold is a funny one. Okay. Gold is not, many people think gold is like it's a safe haven. Okay. Yeah, it is kind of a safe haven, but it's not a usual safe haven. It's not like, how do I explain this? Okay, gold is not the first choice of many people to put money in when markets go down. That's what I'm saying. Gold is like the thing you would buy when you are not trusting anything else. This is a safe haven asset, but for extenuating circumstances. Okay, so during the during this period of time when gold rallied, there was a lot of talks about the US dollar, staying, the US dollar staying very low with low interest rates, and that's the reason why gold was being bought up a lot. Okay, because if gold was if the dollar was cheaper, means it would be cheaper to buy gold. Okay, so it's like there are many forces that work within the market, and gold is not exactly like the biggest thing that people would jump towards if suddenly the market sells off. Okay, that is not what I'm saying. Like, don't buy gold because you think the market's going to sell off. The reason why gold is on my watch list personally is because Bitcoin has been rallying. And Bitcoin, FYI, If anybody on this live stream had bought Bitcoin right when I told them to, which I didn't, we called it out on the live stream and it was trading like, I'm not really sure exactly where, but I think it was somewhere here. It was somewhere here. At around $16,000. You would have made a lot of money on this so far, okay? And we saw this bullish breakout here, and I obviously didn't trade Bitcoin because I don't invest in cryptocurrency or don't trade it. I just, I don't enjoy it. I don't, see the thing in it. But remember that we were talking about this last week as well, BITW. If you didn't want to invest into Bitcoin alone, you could do BITW, which is Bitwise, the 10 crypto index fund, and hold this for a bit. Okay, so the reason why I was looking at gold as a trade is because Bitcoin has been rallying. Okay, and Bitcoin is also priced against the USD, and it's also considered a fiat currency and an alternative to gold. Okay, it's an alternative to gold. This is what people buy when they don't want to buy gold, all right? And when they're looking at a secular trend, gold is if you think about it, it's a very traditional asset. Bitcoin is more of the new shiny toy that it's like the new kid on the block that everybody wants a piece of, right? So that's the reason why I say, if this has rallied, it's a matter of time before gold catches up, okay? It's a matter of time. So especially if we see the dollar move the other way, then we will see gold strengthen. Okay? We will see gold strengthen. So this is the reason why gold is on our Snipe List. Cryptocurrency rally, interest rates still low, bonds are non-attractive right now. Investors may pivot out of equities and rush into gold when equity rally softens. Good to start building a position here. This is the catalyst for the gold position. Okay? And the risk to reward ratio favors the upside here, obviously. We want to start building a position ahead of retail investors, which will pile into the rally. So scale in slowly. This is what I'm saying. Okay? You could do something like, $182, $183 calls for like next year, March or February. That should yield you a really good amount of time value and a good amount of value for your options. Okay, great. That's gold. Next one is Apple. Now this one is not exactly like the best play on the Snipe List today, but I still think that if the market is bullish as heck, which what it looks like it's gonna, I think we'll have a sell-off before we go up though. If the market remains this bullish, then Apple's gonna rip. Possible expectation of strong holiday sales, iPhone supercycle, and services bundle may send this higher with a rally temporarily. There will be some kind of a catalyst, I feel, with Apple. And then the risk to reward ratio here actually favors the downside, but we think that this can make higher highs if the market cooperates. So be very cautiously bullish with Apple. That is what we are saying for this one. Okay. Next is NEO. And we've been talking about NEO for about 2 weeks now. If you have been in NEO with us since we started calling this out, just FYI, we started calling NEO out here. Okay? And now this is your second chance to get in. If you missed the first rally, this now is your second chance to get in to NEO. Okay? Don't say I didn't tell you so. Alright? Don't say I didn't tell you so. It will probably come down into the demand zone and then bounce to make a higher high again. All right? If the market sells off abruptly, then that will be a different scenario. For right now, if NEO maintains this little wave that it's doing, I say it comes down to this level here where I've drawn the A wave, bounce up to the B wave, come down to the C wave, and then take a nice little rally up to the D wave. Okay, up into this demand zone, the supply zone up here. Okay, we already hit our first target there. We played this one to the top, made a bunch of money here, right? Now is your second chance to get into NEO, and the catalyst for this is the NEO Day event, which is on January 9th, looking to play up the event. Now, remember, We don't know what Neo Day is, neither do we care about what Neo Day is. We're just playing the run-up to the event. This is literally a swing to play for a couple of days and get out. That's it, okay? The risk to reward ratio here favors the upside. Pullback here is nice enough entry to be building a position for a rally after the bullish breakout from this consolidation. That is what we're seeing over here. Nice falling wedge that broke out, and we might see a nice little ascending pattern here. Okay. Last one is Boeing, and you could do either Boeing or you could do either one of the airlines. To be honest, you could do AAL, you could do Delta, you could do Southwest. Those are the three that I particularly like. Okay. This one's around the stimulus package approval by Trump. And with vaccines getting approved all around the world, this may be a nice little pullback for you to take the opportunity and capitalize on upside potential. Okay. So the risk to reward ratios here favor the upside, but it could go either way with Boeing. So let me show you real quick. With Boeing, this could literally go either way. Okay. We actually prefer the upside risk to reward here. The downside risk to reward kind of sucks. But then at the same time, I feel like it's going to continue to consolidate and then break out. So we'll see. I mean, it did bounce pretty strong on a 200 moving average. So let's see if it bounces again. If it does, then this trend is going to be intact to make this move to the upside to the 250 levels. Okay. I do see Boeing going back to $300 next year. If everything pans out, vaccines are on track, this and that, then, you know, we may see Boeing go back to $300, $400 next year. All right. This is one that, you know, can very quickly buy up. Very quickly. If you guys are enjoying the stream so far, make sure you guys smash the like button. I really appreciate you when you do that. Remember, that's the only thing I ask for when you guys are here. Just hit the like button. You know, helps me out, helps the stream reach to more EJA tribe members. And I truly do appreciate that very much. You know, you also have the option to donate to the stream if you want to. There's, you know, support ways to support through super stickers and super chat if you want to. But, you know, if you don't want to, it's not necessary. You could just like the stream for me. That would really, really do me a lot of help, because then YouTube recommends the stream to other people. So I'd really, really appreciate it. So here with Boeing, we also have a 1:2 risk to reward ratio. If you look at this, you know, entry here, you know, setting a big stop loss. This is a swing trade, obviously. You know, playing this as a swing trade looks like a really nice setup here. But as I said, this could go either way. This could go up or this could go down. So we are looking at this to marinate. This is a marinate trade. But we want to put this as part of our list because we want to watch this. And this could easily make a move up when the market opens. Okay? So watch this one closely. All right, cool. So that's your snipe list for today. Should be interesting. Let's see what happens. And I was going to talk about the ticker of the week. So let's get that done. The Waltons continue to sell shares of Walmart. Disney's EVP, General Counsel, and Financial Planning and Tax Controller have been selling shares. Not too much, just 1%. The Waltons have been going crazy, though. Well, I mean, okay, in comparison to how many shares they own, it's not crazy, but still. Salesforce President and CFO, COO, co-founder, President, Chief People Officer, and and this guy. They've all sold shares. The president and chief people officer sold 72% of his shares off, which is kind of cool. $316,000 worth. Interesting. Wow, I'm surprised he had so little shares. He only has 500 shares left. This guy, the CFO, wow, look at that. Dude, how does the president, the chief people officer, get so little shares, and then the CFO, he sells like 5,000 shares, and that only makes up 30% of his shares, and he still has 13,000 shares. Damn, that's, or maybe this guy sold shares before. That's why. Maybe that's what happened. These people, when they sell shares like that, I don't know, man. Kind of sketch, to be honest. Mark Zuckerberg also sold some more shares on 22nd. Apart from that, we know these. Disney. Yeah, the rest of them are people that we know. Last week we went through these. Okay. So this brings me to IQ, which is the ticker of the week. But right before that, I want to answer a couple of questions, see what you guys have on the chat. How's everyone doing today? Amazon 3,500 calls for 129. That might be a bit too short expiry. I would say, but I do like where Amazon is though. Really interesting setup here. I like it. Consolidating above this this ascending pennant here. I think it could rip, but like I don't think it's gonna rip to like 3,005 by end of January. I mean, I don't know. I'm a little skeptical about that. 3,300 might be a possibility. Should we get into put of the option for SPY, also by TLT call? Yeah, I mentioned this earlier. Yes, for the most part. What's up? Good morning. What's up, Ryan? Welcome back. Do you think Disney would make a run today? It ended the last trading day with a beautiful cup. Where the cup at? Are you saying like daily or something? What time frame are you talking about? Must be a small time frame. Oh, you're talking about this. You're talking about this cup? I don't know, man. This doesn't really look like a cup to me. It's not a very good cup, if it is. I don't like to trust cup formations on the shorter time frame. I like minimum 1 hour. That would be, yeah, on the 1 hour, you know, that would be decent. I mean, pre-market it's already up at 175 because of S&P 500 rally. So, I mean, it could continue running. It could, if that's what you're asking. Dollar, morning T. What about Bitcoin, Ethereum, Stellar, and increasing institutional entry for hedging purposes as well? Yeah, I just mentioned that. Jay Lorth. That's another thing that I was talking about, right? That the reason why I was talking about gold is because Bitcoin has been on the rip, right? Don't you get Bitcoin FOMO? No, I don't really. Honestly, I'm you know. But then I gotta say, if the next time Bitcoin dips below, you know, see, like for me personally, I would only buy Bitcoin if it dipped to something ridiculous like $6,000, or like, you know, $8,000, $6,000 to $8,000. That's where I would buy it. Like if somehow overnight this thing came down to $6,000 to $8,000, okay, then, you know, I will buy some Bitcoin. But I won't buy it here just because, I mean, I could buy BITW. You know what I mean? Like I could buy this. Why would I want to buy the whole Bitcoin? Like, why would I want to just buy Bitcoin when I can buy an ETF that holds a bunch of different what do you call coins, right? I would prefer this. Do you see Snap trending upward or continuing downward following FB lead? I think Snapchat is doing great, man. As a business, I think they're like finally getting their footing, but it definitely does look bearish here. It looks like it needs a correction. It needs to be smacked down, like at least to this level here, 37, 40, this level. It could find a bounce around 43 here. This could be your interim demand zone with Snap, I would say. I'd say for now it looks bearish, but then long term I think bullish. But it needs a correction before it can continue going. You know. Not big on United, nah. I would prefer my top. I think Southwest is the best company in terms of fundamentals. Then is Delta. And then is, I believe, AAL. Those are the three that I believe. tax loss harvest. Yeah. How does the stimulus is going to affect gold and Bitcoin? Well, the stimulus is not gonna. Okay, well, you could see a further Bitcoin rally. To be honest, more people getting money, $600. They might all just dump it into this. But then, you see, the thing is, like, Bitcoin is no longer just Bitcoin is not just a U.S. investment anymore. It's a global investment now, right? And so, like, for me personally, I think it's driven by herd mentality, right? The more that it rallies, the more people buy. It's FOMO, right? And that's the reason why I don't buy into it, because right now, I just don't see the intrinsic value for it. But I know it's gonna keep. It will probably keep going higher. But what I don't enjoy doing is buying things that don't have, like a. It doesn't have a X factor. What sets apart Bitcoin from any other currency is only the fact that it's anonymous, okay? But then cash is also anonymous, if you think about it. So for me, it's just not good of a proper investment just of yet. I mean, it's getting there, but I haven't got to the point where I would say, okay, I'm going to close my eyes and buy this, And the other thing that I don't like is the market manipulation of this thing. It's very algorithmically traded, so this is one thing that I don't like. Okay, let me spend some time to talk about IQ here. So for many of you who don't know, I actually have a very deep history with IQ. Back in 2019, I actually started buying heaps of this shares of this company. Okay. I dollar costed average between $19, $18, $17. I bought $20, 16, 18, 16, 48, 18, 20, 100, hundreds of shares. Even bought some call options along with them. And then on January 25th of this year, wait, was it January 25th this year? I think it was this year. Yeah. This year, I sold all my 1,300 shares for a profit at $22.16. So, made like a couple of grand on this, like almost, I want to say, $6,000 to $8,000 on this trade. It wasn't like a very big profit, but I wasn't very sure about the direction of the business. So this was a long-term hold for me at that time. I had accumulated about 1,300 shares, and I decided that I would sell all of them for a quick profit and take that the profit, so that I didn't need to deal about sweating about this business. Now, the main reason why I got out of this was because I wanted to free up the liquidity to buy other things that I was looking at that time, and particularly I was looking at KWeb, which was something that I was particularly interested in. I was thinking, instead of me buying just one Chinese stock, I wanted to buy this ETF that had a whole bunch of Chinese stocks. So I took all of my profits and all of my capital and dumped it into KWeb at the start of 2020 January. Okay. Somewhere around, I want to say I dollar costed average here. And then KWeb went from $53 to $39. Okay, and I added. I didn't buy everything at one time, so I bought some, then it went down, I bought some more, it went up, I bought some more, then it went down, I bought some more, went down, I bought some more, and I believe I added most of my positions were added over here. Okay, I added most of my positions over here, and I was holding a massive position in KWeb, and then KWeb did this. Okay, and sometime in September is when I exited KWeb over here. Okay, because I was convinced that the China tech rally was over after such a huge move up. But then KWeb started to go higher, and I didn't trade this again. Okay, so I took my investments from IQ and dumped it straight into this ETF that really gave me a nice return, doubled up my money, and then got out and just was chilling for a little bit. Now I'm looking to get into KWeb again, and this time when I buy these shares, I'm going to actually sell calls against them, because these shares actually, the options contracts yield a pretty decent income if you hold these shares and you sell calls against them. I really like that strategy, and I've been doing it for a while. Okay. So IQ is a business, and let me just go through it real quick with you. It's basically a business that does. Sorry. Here we go. It does a bunch of different services. Okay. Online games, literature, and comics. All right. It does shows, kind of like Netflix. Okay. But they concentrate on short form and long form. All right. They do live broadcast content for short form videos to host, grow their fan bases. Okay. And then IQ Mall, it's an e-commerce platform focused on entertainment-related merchandise such as VR glasses. And they also sell other products such as electronics, apparel, beauty, and skincare products. And then they also have a thing called Suike, which is a video community app that empowers a wide variety of professional user-generated content with rich features of entertainment experience. I think this is similar to TikTok. Okay. Then they have ECE Pao Pao social media platform, which is connecting fans with celebrities and content for their interests on platforms where fans can quickly and conveniently disseminate information in various formats. Okay. Now, majority of their revenue comes from monetization through membership services, online advertising, and content distribution. And they generate revenues through online games as well, live broadcasting, IP licensing, talent agency, and online literature and e-commerce. Okay, this is their main modus operandi. All right, so they make money through these secular trends. The membership services here are pretty much a substantial amount of their revenue stream, but the problem is that their ad revenues have been suffering pretty badly recently. Okay, now I was very bullish on this company initially because they were growing their user base at a pretty alarming rate, which I really liked. All right, but now this business has taken a turn for the worst. So let me dig into this company and tell you right now that this company is at its last hurrah. Now, if you are a person that likes risk, this is possibly the biggest risk to reward you can take for a business that you will ever come across. Okay? The risk to reward ratio here is immense. If you are willing to take the risk and willing to lose a whole bunch of your money, I can tell you that this is going to be the investment of a century. All right? But obviously the selling is not over yet, so I would wait a little bit more. Okay? I think after I'm done with the intrinsic value for this company, it should be somewhere below this demand zone here. I don't know if it actually will be, but I'll tell you guys on Wednesday what I value this business at. But let me explain to you what's going on here. So, this company has been actually in a loss for it's never been in a profit, first of all, okay? But that's not bad. You know why? Because this business is like Netflix, right? And in order to acquire subscribers, you have to have severe cash burn, just like Netflix did. Remember how Netflix was as a business? It didn't actually go profitable until year, I want to say 7 or 8, okay? And investors were like almost going to give up on Netflix. Do you guys remember that? Well, this company is in a similar position, okay? It's in a similar position. If you look at this company's revenues, okay, they have been growing quarter over quarter since their inception, okay? They have been growing 7 but it's been tapering and hanging around this level for a while now. They're unable to grow their revenues and break through. So for the past 1, 2, 3, 4, 5, 6, 7 quarters, and now coming onto the 8th quarter, this business has not been able to really push the envelope. And this is all happening during the time when they should be growing revenues. Okay? They should be growing revenues. Why? Because COVID hit China and people were indoors, right? They should have grown revenues tremendously. It just shows that their platform has not penetrated people to use and retain them. So people are using other services, right? Or maybe the content's not that great. Now, that's one thing. They've not been able to generate substantial revenues. The gross profit, even though they've been able to somewhat make it through to negative positive territory, their net income, the net income has been a nightmare. This business has only but lost money since inception. And the losses have been mounting. This is in millions of US dollars, okay? Now, one thing you should know about this business is that it is a spin-off. It's a spin-off of Baidu. This business is a subsidiary of Baidu, which is the Google of China, okay? And so if anything happens to IQ, Baidu is, I think, probably going to bail them out, okay? But this business is sitting at multi-month lows, okay? And with its surmountable losses that it's experiencing, it has very bad financials right now. Like very, very bad, all right? Look at the interest coverage ratio. They're in tremendous amount of debt. Look at this. You guys have been watching the stream for a long time, so you know when something's really bad, right? Remember, how much do we usually look for these? These we look for above 1, right? We look for above 1 current and quick ratio. Must be more than 1. These are at 0.5 and 0.76, okay? Then interest coverage ratio, what do we look for? We look for at least 3 times, right? We look for, and positive. This is negative 6 times, okay? And debt to equity ratio, what do we look like? What do we look for? We look for less than 1, right? This is 3.47. This company is insanely levered, okay? This company is making losses and this company does not have a economic moat. Which means that this business is now in a lot of trouble, okay? To make matters worse, just when you thought that it couldn't get worse, the company announced, okay, announced $800 million of convertible senior notes. And on top of that, 40 million shares diluting at $17.50. Okay? This is insane. Okay? This is really insane, guys. Like, for a company to do this. This is called desperation. So as I was saying, this is their last hurrah. I'm telling you, last hurrah. They can keep running. The thing about it is, this money that they're borrowing. Look at the terms of this thing. Okay, first of all, 4% convertible senior notes, and they're due semi-annually. Okay, this means 800 million. What's 4% of 800 million? That is 4 times 8 is 32, right? So 32 million. $32 million is payable, okay? $32 million is payable per year for these notes. So their cost of debt is $32 million. On top of that, they're offering 40 million shares at $17.50. So they're raising another, what is it? 1750 times 40 is 700. Right? 700 million. So 700 million from shares and 800 million from bond offering, okay? And they would have to pay a whole bunch of money on this debt, okay? Now you can say, oh, they could just use this money to pay back. But then if the company is not generating profits to cover, how are they going to do so? You get what I mean? So this is not a good investment right now. I just wanted to cover that. And I'm going to cover more of this on Wednesday. I just realized that it's 10:30 already. I'm sorry for dragging this on longer than I should have. More on this on Wednesday. I appreciate you guys taking the time out to be here. Love all of you guys. Thank you. I'll also cover institutional holdings on Wednesday so that we can go through that. And I hope you guys have a great trading day. Make sure you tread lightly, okay? I think the market will rip, but be careful of rug pulls. Be extremely careful of, like, you know, sell-offs all of a sudden. I think it will happen, okay? Be super careful. Yeah, you can see it. The market's already starting to take some profit here, okay? All right, guys. Well, have a good day, and I'll see you guys on Wednesday. Take care. Peace out.